D-Day Warriors, are you ready to rock? How you doing, Paul, Alexander, Bran? Everyone doing okay? Getting ready for the big number. Did you make your plan last night? Ryan, how are you, buddy?
Hey, good morning. Ryan's not going to be here in the first half. He's going to be here in about 15 minutes or so, I think. How are you, Coach? How's everybody?
Good. Good. You think the market's front running expected better news on the inflation?
I don't know what to make of it. The market is trading as if somebody knows something, but I fear that we are heading for disappointment once again. This has been the theme over the past weeks. So there is hope, and by hope I mean hope that numbers are not good, so that the Fed pivot gets moved closer, whenever that is, and risk rallies. But as with the previous big important prints, it seems like the market is hoping rather than seeing actually something concrete. So I wouldn't trust this move too much. I mean, I don't know why we're rallying. Maybe I missed something. The other guys might help me. But
this is all the UK news, right?
Yeah, about them working on a U-turn, Blake.
I mean, the trust government's like, oh, this budget. I mean, she's got a lot of pressure on her. So that's what's actually made the market explode. I mean, look at the sterling. I mean, we're up literally 160 pips on the day, but from the lows, I mean, we're up, like 250 pips. So I mean, the market is completely cheering this right now, and you can see the gold market's moving. It's been big news.
What if this is going to repeat what we did here, Blake?
Well, the sterling's holding a 50% retracement right now, and we noted that a lot yesterday. Unfortunately, I didn't get long ahead of everything this morning. I've been wanting to be long the sterling today after the CPI data. So guess what? Look, if they actually do a U-turn, then we will end up retracing this entire move, and probably then some. We could theoretically be trading above 118. So I think there's a lot of gains to be had if this is truly the case. But I think the sterling has also been pretty clear on not creating new lows, and I think one of the major low might be in there, Dale.
Yeah.
By the way, Ryan is running. Ryan should be here any moment. He had to go run an errand really quick for his wife.
We're okay. So S&Ps, keep trying to close under 36, and it can't put two closes in a row. You ever use that rule, Blake, that sometimes it's not just one candle, you wait for two to really give you confirmation that a level has been broken out of to the upside or downside, more than one close?
No, for me, it's usually just a close. If I can get a daily close above or below wherever I'm looking at, that gives me more confidence. Then I'll start adding the next day to that position. So that's what I tend to look for. But you're looking at the S&P. Look, we're creating. I don't want to say a double bottom just yet, but we're actually trying to. And I'll show you really quick if you want. But I know there's other things you want to talk about. I'll come back to that, but I want to say we're breaching like a little bit of a wedge resistance right now. So there's some hope that we could create some pretty key support down here at 35.60.
What if we get a good more benign reading than expected? I just keep looking at these bonds. I know catching a falling knife, but they sure look primed for some type of short squeeze here. I know Jim has been sticking with it, and he was early but he's still, I rarely see him say that,
where
buy
he's
more.
where he starts buying, as it's coming down. This is one of the conversations I had with Chris Weston last night on the trade-off was, at what point are bonds a value play here? And you have, as an investor now, you have more options, right? Like, I don't need to have all of my money in the equity markets.
You could get 4%.
I can diversify. I can, for real, like, I can diversify into the bond market and get some yields. I mean, I got to imagine that treasuries, or fixed income globally is looking pretty attractive down here, right? I mean, it has to be. I mean, I would think.
Not to Steve.
Not to Steve. Steve's like, screw that, I'm buying crypto. But I mean, if you want to get yield,
yes, exactly.
If you want to get, yield, why not pick up some, like, hell, I'm not going to get in the stock market. Why don't I pick up some, treasuries down here? So
I saw on CNBC yesterday, Blake, that, every once in a while they'll do a big option trade. Will give you a little bit of a market tell. And some guy threw a few million in that was looking for yields to drop to 2.9 by the end of November. So, they were debating whether or not that would be because the market's melting down, or people would come back, move that quick back down to 2.9. Doesn't seem that quick. I mean, down is faster anyway.
Yeah.
But that's what, millions of dollars on an option trade out of the money gets people's attention.
Yeah, man, that would pay huge. That'd pay huge. So, Dale, what do you think with precious metals here? Are you doing anything?
Just holding the miners. I'm not doing anything leverage, but I know silver. There could be some doubts here in silver if it doesn't get going, and gold still, playing with this 688. I think it all has to do with it's more about what does a dollar do, and this is potentially a failing rally, but we could get a bad number and then blow to new highs. But I have a toe in prior to CPI. Usually don't short the dollar index from yesterday's PPI. So I'm hoping that the guys that are front running are right.
Yeah. Well, we'll see. What I'm gonna go ask you guys here. I'm gonna take over some
but
charts.
These miners, Blake, I just want to show the crowd.
Oh yeah, go ahead.
All right, just it builds my confidence. Even if silver, I don't know, maybe silver's going to wash out under 1750 one more time. But even if that happens, that certain silver miners like AG won't make a new low. This won't make a new low. So
and that's what you look for, right? When you're looking for miners, a bigger turn. Yeah.
It's been the opposite for, because I've been long all the way through this, right? Silver would be strong and the miners couldn't, pop. The picture's changed. Now the metals are weaker and the miners aren't giving back much.
So speaking of the of gold, this is really, in my opinion, very key hold here in gold. It's at the 618 retracements at 1660. Yeah. We've had a nice bounce off there today, but everybody knows, because I was talking about it. Well, everybody in the Forex Analytics community, by the way, we have
that's everybody.
Well, we have the morning edge and we have the daily roundup where we talk one-on-one with everybody. This is obviously the range that we're developing ahead of CPI, and it's pretty simple. As far as the CPI goes, if the data is weak, let's say we put in a 7 handle, like 7.9 or maybe even 8, which would come in below expectations when you're looking at CPI data, then if that's the case, then we might actually get a rally here, and we might actually see gold move higher. But if CPI comes in hot, we're going to take that 1660 level out pretty cleanly, in my opinion. So I think the range is set and the trade is set. But I do, I'm trying to acknowledge the fact that gold is holding this 618 retracement, and I think that's going to be pretty important. So if you guys want to know where your risk is and you want to be long, that's it. And as a trader, what we try to identify, because the only thing we can control is our risk. That's it, right? I can't control, damn headlines. I can't control, what data is coming out. I can have an idea or an assumption of what I think the data is going to be, but we don't know, and what we can control is the risk. So like if you're going to be long gold, there you go. You get below 1660, or if you want to be short, if you want to be on short gold, you probably don't want to risk below, or above here, somewhere above 1700. It should reject there. But if we break 1700, it's probably going to be a pretty bullish event for gold. Anyway, just a little setup for gold ahead of the CPI data. Now, Stelios, I know you're playing precious metals quite a bit. Any thoughts here?
The quick answer is no. We wait for the CPI. I've said for a while that 1680 is, we all know 1680 to 1690 is really the level for gold. It seems to be below now, but obviously the number could change a lot of this move in a few minutes. I'm only playing this I'm mainly playing these on the long side. Remember, I did short gold above for the breakdown below 1680, which worked, but I am now looking to play them on the long side, but I'm not doing anything until we get confirmation. For me, confirmation is going to be gold, closing, considerably, or let's say closing well above, say 1680 to 1690, which will mean to me that maybe we have turned, and also risk has to go the same direction as well. I don't think metals are going to go higher if risk gets sold. So there has to be a turn in risk, and that for me is not here yet. End of story. So until we get a shift in from the Fed, or central banks start telling us that this is it, and that tightening is going to be stopped eventually, which it will be. We know it will be, but when they do tell us and give us some signals on that, then I'm going to start looking aggressively to get long, but not just yet.
How about if the dollar is putting in a failing rally here and there? We have a top in the dollar and the dollar weakens. Don't you think the market will celebrate that and they'll take some pressure off, risk off?
Dale,
There'd be risk on.
Dale,
Yeah, go ahead, Steve.
I have to jump on a meeting, so let me give you my perspective for like 30 seconds, and then I have to go. I'm going to say the exact same thing I said.
Just wasted 10 seconds.
Yeah,
I know. Like, let it out, Steve.
I'm going to say the exact same thing I said before the previous CPI and the data we had post that.
Yeah.
We get a lower number in the CPI. The market fears the dollar begins another leg lower in what will prove to be a little bit more of an extended correction. Equities take a respite and move higher. And in my opinion, all these moves will be short-lived before we get the next move in the direction of the trend. Now, we get a disappointment like the previous CPI. The market was expecting a slowdown in the CPI to 8.1 previous time, and instead we actually got 8.3. Now we wait for the CPI to indeed cool down to 8.1. Let's say we get 8.3 again. Expect the market to immediately resume where it was headed. Expect the S&P and equivalent indices to post new lows. Expect the dollar to challenge the recent multi-year highs. I think it's honestly as simple as that, right? So
why
we
just
get a
challenge them?
We get a weaker number in the CPI. We might actually start unfolding a correction that could be traded for a few days, right? Otherwise, I think it's in vain to even, look for that type of a move.
Okay.
And look, if you guys want more
you didn't make
Steve,
yourself late.
come on the morning edge. Steve gives usually his 30-minute take on the markets over there.
Yep.
Thank you, guys.
All right. See you, Steve.
Good luck with the data.
All right.
Yeah.
And
thanks, Steve.
have a good meeting. All right. So real quick, I just covered the dollar.
Just 1 second, Blake. What if everything comes in line? There's a question about Jason. What if everything comes in line, which is a good question, actually. So how is the market going to react if we get exactly what the market expects? So exactly a slowdown to 8.1, etc. In my opinion, since there is still quite a lot of optimism, there is a very decent chance that if everything comes in line, we get CPI numbers and initial jobless claims exactly as the market expects. I think there is also a chance that the market is going to lift equities a little bit more and sell the dollar. So I think that if we come in line, we more or less go to the scenario that we keep seeing a little bit of a corrective move in the dollar and equities. That's what I think.
All right. Thanks, Steve. That was way longer than 30 seconds.
Yeah. Bye-bye.
Oh my God. I thought that was like an hour and a half.
Now you know what to get him when you get him a stopwatch when when
seriously,
he comes over.
We're gonna, I wish I had a button where I can just cut him. Oh, I actually do have a mute button. I'm just kidding. Love
Get him a
Steve. All right.
stopwatch.
Dale, to answer your question, I think the dollar and stocks, they're correlated, right? So if the dollar turns, it means that the risk is being bought. These two
all
go
one
together.
trade.
It's all one trade.
All one market.
You guys can think you're what's the word?
Differentiating.
No. You can think you're diversifying in the market by just I'm trading some gold and I'm trading some silver and I'm trading Apple. No, it's all one trade. Just take one position. I actually spread my trades out, but I'm just saying it is really all one trade. You look at the dollar is actually probing some support. This is the breakout area. This is our support zone that we've had obviously on the dollar index, which is important because I think it's important just for the dollar for everybody to see that we are trying to create a lower high. Remember, and for those of you that aren't here with us every day, if you're just tuning in for the first time, this is a 20-year channel in the dollar index. This is a weekly chart, just so you guys can all see. 20-year channel, right? We hit the 88% retracement of a 20 some odd year range. And if you go, near term, and that's the red channel that you see here, the ascending channel, we actually had an overthrow, which Dale loves overthrows. You get an overthrow like this, that usually means that we're going to get soon a reversal and a move back, through channel support. Now, a lot would have to happen in order for that to happen, right? I mean, you're not going to see that today. It's not, we're looking at daily charts and weekly charts, but that's the pattern that is developing in the dollar index. But Steve has a really good point, and that it is something that we have to, if you guys are not in the camp that CPI is indeed peaking, and you're like, we're going to have rampant inflation for a long time, and that's your argument. Look, then you've got to start thinking that we're going to break higher in the dollar index soon. And when or if this happens, I'll draw it out here really quick. When or if this happens, we break above 116, then in my opinion, you have the basis for an accelerated move higher in the dollar, to where it starts to break things. You guys hear the dollar referenced or being
wrecking ball.
It's the wrecking ball. It's the what's the superhero comic book Juggernaut? It's a juggernaut. It's the wrecking ball juggernaut. Look, if inflation continues to run hot, it will be, and the dollar index will have that capitulative, take everybody out and destroy every market type of move. And that's the one thing that I think that is a big risk for the markets. Don't you guys agree with that?
It is a big risk, and the world has shown before that it cannot handle a strong dollar for too long. So that will definitely be a wrecking ball if that happens. I hope it doesn't.
I hope it doesn't either. I mean, none of us do. But obviously in an event of like a nuclear attack, in Russia, Ukraine. I mean, that's what happens. You know, you see everybody rush to the dollar. I was talking to Mark Dow yesterday. Mark Dow is probably, I told everybody in our chat room, I'm like, watch that interview, because if you want to know how little you know about the markets, just watch that interview. And when I was talking to Mark yesterday, it was a good 45-minute conversation. You know, he's like, look, you know, everybody's denominated in dollars. Like he used an example of like, if you're in Argentina and you're talking to, or you know, Brazil, or, you know, somewhere in South America, and you know, they've got a hedge fund. It's not denominated in real, it's denominated in dollars. You know, he's like, but no one in the United States dominates their portfolios in reals, or, you know, pesos, or whatever else, or whatever other currency. They don't use their local currency. Typically they use, you know, dollars, because it is the reserve currency. So when everybody has to rush back to dollars, come back to dollars, they have to shore up all their open positions. They're coming back to dollars, and that's where the dollar demand, a lot of the dollar demand comes from. He's like, it's simply just a risk on, risk off tool at this moment. So, and
by the way, I put that link to the video on the chat room, on the
great.
chat box.
Yeah, great. Okay, it's a really great interview. I haven't talked to Mark in years. It's been, I think I did an interview with him before we actually had Forex Analytics. That's how long ago it has been since I've interviewed him. So that probably 7-8 years ago, maybe. Anyway, great interview. So let's
by the way, look at the cryptos. Market's rallying, and they are not looking strong at all. I mean, they're down. Look at the Bitcoin is very close now to the breakdown point.
Yeah, Ethereum's in this channel. Bitcoin's getting close to that 18K. Yeah, I mean, I wouldn't. If risk rallies, I think I've mentioned this to you guys before, but I'm going to say it again. I don't think Bitcoin's getting above 25K. Not in this next, whatever, you know, we see the S&P go from 30, you know, wherever we're at, let's just say 3,600, and we go to 4,200, you know, in the S&Ps over the course of the next couple of weeks, or excuse me, over the next couple of months, let's say we get back to the 200-day moving average, down, you know, to this channel, to the upper end of this channel. If that happens, I think Bitcoin maybe gets to 25K. I think it's going to be in a multi-year consolidation, just like we saw it 3 years ago. So if you guys are in crypto and you're looking for big moves, I don't think that's the right place to be. I think you're looking in the wrong spot. You're going to be, and remember, when we get consolidations like that, I mean, you might still get a 30% move higher from where we're currently at. But, you know, I think the days are looking for, you know, 400,000% move is just, it's over right now. Wouldn't you agree with that, Stel?
Yeah. I mean, we're seeing volatility just come right down, and actually, cryptos are trading technically quite well. I mean, they follow the levels. You know, ever since institutional investors basically got into the market, they trade a lot more technically. But I agree. I think their volatility is a lot lower than it used to be, and I don't see that increasing anytime soon.
Yeah, and you're just not going to get that beta that you would have gotten in the past in crypto. Hey, really quick, and I don't know where Ryan's at. He's must be running late here. He had to run his wife over to do something. Looks like he just got in. He's just popping in. I don't think he's going to pop in. He's in our chat room right now. So see, this is our chat room. So I just saw him come in. This is, if you guys want to see what the Forex Analytics chat room looks like just from the last hour when I got up, would be somewhere around here. And this is just the general chat room. Yeah, that was when I got up this morning, right there. And that's how active just the general chat room is. Anyway, if Ryan doesn't pop on and give us his ideas, I'm going to ask you guys this. Dale, what's your best idea today? Because I'll tell you what my best one is when you guys are done. Okay,
bonds.
let me rephrase that. The inflation data is hot. What are you going to do? It's hot. It's a hot print. Stocks start coming down. What are you going to do?
I'm going to buy bonds.
You're going to buy bonds,
and I'm going to sell into dollar strength.
So you think, and I agree with you. Just so you know, you think that bonds are going to rally as a safe haven play, and yields are going to come down on hot data.
No, that they may start off lower, make a new low, but
Oh.
I'll buy a new low if they get hit hard
you know,
after the number.
I'm in like Flynn with that. I like that. I like that idea. I don't know if I'll be trading bonds today, but I like the idea. Okay, how about if the data is weak? We got a cold print.
I'll
And
just stay
and
short the
the
dollar
Fed
and-
needs to see, the Fed needs to see a string of this data. It's not, today is not the end all be all, but
yeah,
weak data. What do you do?
stay short the dollar and look for any pop. Sell.
Well, let's say
dollar
you're not
strength.
short the dollar. You're not short right now. What do I do then?
You go with it and don't get cute, because this could be major, and under 110 you've sealed the deal.
Okay. Sounds good. And I like how the euro's consolidating around the 618. Stelios, what do you do?
If the number is hot, if the number is hot, I look for things that are on the brink, and I go short those. So I would probably short Bitcoin and the S&P as well. I think, because for me the macro environment has not changed, so I would probably short S&P, a stop at like 36.50 or something like that. And I think the bottom is going to fall out in the S&P. So I think we're going to take out 35.60, whatever that bottom is.
I agree
that's what
with
I would
you.
do.
That would be my trade. If it's a hot number, I think you just short the S&P. You got a bearish wedge. You got a lot of people that are buying right here, below this 35.50 level. That's like, to me, that's just like an elevator shaft straight down, right? It's straight down to the channel support, which comes in around 3,400, which, by the way, 3,400 would complete the head and shoulder pattern, the long-term one that has been on our charts since this year. Right, the entire year. So we finally reached that target of the head and shoulder pattern. Right.
Do you want to know what I do if it's a slightly weak number?
Slightly weak.
Okay, so like
all, please.
I would sell the S&P as well. Again, a pop on the S&P. I would probably sell if we get anywhere near 3,700. I think it would be a nice sell into it, as it has been for a while now, right? So
okay.
rallies.
So you'd sell a rally here,
but only if it's marginally weak. If it's a big low print, a really low print, then that could change things.
So you mean you would mean, if you're looking at the data here, let's go over to Forex Analytics so we can just see the numbers here that you're referencing. Here's Thursday.
So we're expecting 8.1 year on year, down from 8.3.
Right here, right.
Yep.
So if
I'm going to wait.
So if we get an 8, if we get an 8, you'd sell risk. But if it's a 7.9, what do you do? Because then everybody's going to go, oh my God, it's really coming down.
If it's a 7 handle, then I wouldn't be getting in the way yet. I'd wait to see more price action.
Good. And let's all take a step back and realize that we're not talking about CPI at the 2% target of the Fed, right? We're cheering, like literally cheering a 7 handle in year over year CPI, which is freaking nuts. All right. Now, here's previous support, which should act as current resistance, as Stelios is talking about. But let me tell you what I'm going to do on weak data. The dollar max is my trade du jour. You guys know I'm already short. I'm actually looking to add to this because I feel longer term, the Mexican peso is going to be trading much lower as the world moves towards Mexico for manufacturing and a lot of other
weak
things.
Dollar help that too.
Oh God, yeah. I think the biggest bang for your buck right now is going to be short dollar mex. Okay. Maybe. And I got stopped out of this week. I was shorting against these highs, but maybe the dollar rand up here, being short the dollar rand, and buying an emerging market currency. Even emerging market currency does qualify for the sterling. I think the sterling is. I'm joking. Guys, if you live in the UK, I'm totally.
What emerging market currency would you buy? The real?
No, the peso.
Peso, yeah, okay.
Yeah, I'm buying the peso, but I am very bullish the sterling as well because I think Truss is going to do a U-turn. Too much pressure. There'll be a confidence vote, right? Get her the hell out. Where's Ryan today?
By the way, that dollar max trade also has very nice carry.
It does. I've been playing it for weeks now. It's great. Now on a strong piece of data, look at the dollar Canadian and look at all of this resistance up here. And let's not forget on the dollar CAD, You know, we're above a weekly 618 retracement. We're above levels we haven't seen since, you know, summer of 2020. I mean,
Here we go.
Oh, here we are. Is data coming out? Shoot.
Yep.
Yeah.
Oh,
You
dang,
just
dang.
too late.
8.2. So that is
whoa. There we go, guys. Gosh dang it. That is a buy the dollar CAD. It's breaking out.
sell risk.
Yep. Sell risk. Guys, that's ugly.
Wow.
It's ugly. It is ugly. And I thought the sterling was going to be able to, you know, be the one to play. Oh, look
Whoa,
at
look
the Aussie
at-
is absolutely getting crushed. Holy cow. And look
Bitcoin,
at stocks. They're gonna
Ethereum,
break
look
down.
at that.
Stock market is going to break down. Like you guys didn't think it was going to happen. Look at gold. Gold got taken out too. Man, look at the S&P. We broke through that support, and now you have to sell rallies back to because you're going to get a bounce right now, I would think. And if you do, you get a bounce back to 35.75, and you just sell it on any rally now. And you have to buy the dollar on any dip. So
Wow.
look at the dollar go. It is absolutely just creaming higher. And surprisingly,
Pound's still holding.
the pound is holding up pretty well. It's like I almost think you need to be a buyer here. So you know, look, I mean, that is something that you might want to be thinking about. But yeah, look at the sterling. Rejected the 618. We're right back down to support here. And the dollar is really just absolutely breaking out. So for those of you thinking it was over and it was over, it's not over yet. And whoops, let's go take a look at the dollar index. Dollar index climbs to new trend highs, but we're also at the 78% retracement, which has been our upside target in the dollar for, like, if you go read our analysis, it's been for the last. So
would you sell it here, Blake?
No, with that data. I mean, I'd want to, but that's you know, strong inflation data, right? So, you know, it's risky. It's risky at this point. A look at gold. Gold just flushed all the stops below those lows. And crypto, yeah, look, Bitcoin's getting close to that 18,000.
Yep.
Really, really critical support
Ethereum
here.
down 7%. Yeah, this is not good.
No, it's not. It definitely is not good. So, but how many people were positioned long equities? You know, the S&Ps, just so you guys know, we dropped 100 some odd points in the S&Ps. That is a huge move lower that we just saw in the SPOOs. So we got that elevator shaft lower. Now you got to sell rallies, you know, at the open. And I think that's what you're going to get, is you're going to get, you know, rallies to sell into. Oh, you know what just hit? Just so you guys see it really quick, because this is the one thing that I will do. Shoot, where is it?
You know, I do have an interview.
Oh, shoot.
Yes.
Okay. I'm trying to get short some dollar yen. I don't know if that's going to happen. I'm not getting executed here for my positions. There's no liquidity, but look, we just hit the 127% extension. So I've been, you know, targeting 147.42, and I didn't get triggered. Our high today is 147.43. So we basically came to the 127% extension. If you want to trade that as a rejection, that's the one that you do right there. Okay. Bruce is coming on. I love Bruce Frazier. He's awesome. You guys need to make sure you stick around for this one. I'm also going to say this. If you have not checked out the Trader Funding Program, make sure you check out the Trader Funding Program. You want to learn how to trade our money and not risk your own money and make 75% of the returns. If that sounds good to you, check out this 2-minute video at the Trader Funding Program. I'm going to put this link right in the chat box. And what else I want to say? Oh, and because you'll end up getting Forex Analytics for free for a period of time. So I'm going to put that in the chat box for you guys. All right, Dale, and everybody, good luck today.
What a day. All right.
What a day it is. And what a I faded the dollar at the 78.6. What the hell?
Anyway, Bruce, great to have you.
Dale, everybody, hi. Thanks for having me. I could have listened to you guys for hours. It's just like,
hey, Bruce, good to hear.
I didn't
good
want
to see it.
Hi, Blake. It's
Huh?
Anyway,
it's like
kind comments.
it's
Thank
like
you.
a hockey game,
It is.
And
Yeah.
in the end, passes the puck to the Swiss, and the yields are at new highs, and S&Ps collapse under the breakdown. Yeah.
He shoots, he scores.
Yeah. How are you, buddy?
I'm doing all right. Yeah,
Good,
thanks.
good.
And I always appreciate the way you bring me on these, like, really mundane days, where
yeah. Well, maybe we need a dose of sanity with what's going on, and the hopium.
You're not going to get it here.
Oh yeah, I think we'll get some clarity though. And I was going to say, when Blake was going to ask me what I would do today, I was going to say nothing till I hear Bruce.
Oh, well, yeah, you can see so stocks on the edge. Can you see my screen?
Yeah, got it.
Okay. Yeah. So it's like, there's nothing to talk about. Anyway, so anyway, my perspective is maybe a little longer term, but I'll try to make it relevant. And so let's go in and just pick up a couple things that from what you guys have been talking about, just for the heck of it. And so one is to talk about the dollar. Now, this is a monthly, so you can tell my time frames are different, but Blake actually put this chart up. And so here we have this great throwover right here on this monthly, very long-term chart. And we had a beautiful hit right in here, classic Wyckoff trendline construction. But over here on the right, this is daily UUP. I know you all look at better currency relationships, but it's good enough for what we're talking about. And so this is what we call reverse use of trend lines, because you're drawing the trend line over the top of the market. Beautiful uptrending channel. Two touches, which is what you'll look for, adjacent, throw over, which Blake had pointed out, and then a very deep reaction. So we would call this, with the gaps and everything, a buying climax with the throw over, and then an automatic reaction almost all the way back to the bottom of the channel. And so we would just say this is a range bound market. And that's the way I'm looking at it, is that you probably get back, return back to the top, maybe over the top of this, but very briefly, I think this is important resistance.
Do you see multiple throwovers on lines like that?
Oh yeah, well, I'm not sure you can get back up to this overhanging supply line, but you definitely can get up to this buying climax peak and maybe a little higher. But then you would look at that. Wyckofians would look at that for the signs of exhaustion and resistance, and then a return back down, and then just sort of this kind of business. And it could be what we call a reaccumulation for another move, or it could be the opposite, but it's way too early to tell. We look for the elements of cause building. And so we need a cause here. And we've exhausted a very, very big upward move. I mean, really an incredible run in the dollar, and then had a big climactic crescendo. And that usually does usher in a range bound condition. So just that. And then I know I don't have a lot of time, but let's go to, you all were talking about the Treasury bonds. Now this is the TLT, just as a proxy.
I use that proxy.
Yeah, Dale, look at this big distribution. I mean, this is the top. So here's July, August of last year. And then here's January of 22, big top here. And I mean, coming in at 152, and we've declined off of this in this count, classic horizontal point figure counting, and down 101.91 is our range. And we did, in fact, I believe this chart is as of the end of the quarter, but we did touch 99 subsequently. And so we are in the middle of this count area. And then this count here goes down. This is redistribution, we would call it, goes down to 99. So these two areas confirm each other. And so it wouldn't surprise me if we now see some kind of a pause. Maybe we build a cause. Maybe it's a cause for more important or a rally of sorts. But the one thing we can just say is that this thing is, you know, really, really oversold.
When you think
And-
about that, sovereign debt, taking a 30% haircut in that amount of time, you just, and you know, then you move to corporate and you move to junk. And how are companies going to be able to roll over debt, let alone governments? And do you think what's happening in the UK, and if you line up their gilts and this, you did a point and figure, they wouldn't look that much different. Yet we're calling it a crisis in the UK, and we're calling it just Fed tightening here.
Well, and we have to call the CPI at 8.2 a crisis. And I believe it in an earlier episode, you and I talked about, I did a point and figure chart on CPI, very kind of a unusual thing to do, caused a lot of people were kind of upset with me because I had counts out of the accumulation base that went up to the area that we went to. We went for, it's like the range was like 8.5 to 11 CPI. And then there's a bigger count that goes up into the high teens. And we don't even want to think.
That's not till next year.
Yeah, right. And so kind of the view we took is hitting this initial count over 8.2, 8.4, 8.5 is that we now are range bound for a period of time. And so sort of the view is my kind of point and figure view of the CPI is just that it is range bound. It's going to be stuck in this area. The Fed's going to have a very difficult time getting inflation out of the system, and we can hope that they could get inflation down to maybe the 6s or the 7s.
Oh, 6 or 7s. Okay.
Yeah, and that still could be construed as building a reaccumulation for another big move. And I had a great interview with Martin Pring over the weekend. We did an interview at ChartCon, and Martin's one of my mentors and a dear old friend. And
I loved his work.
Oh my gosh. I mean, you know, and he's just doing great. And so we were talking about this whole business with inflation, and he's using the analog of the 60s to the early 80s as his analog for the inflation.
So we're just in the 60s now.
Yes, exactly.
Okay.
Exactly.
Yeah.
And so we're in like
I don't remember the 60s.
No. If I'd been around in the 60s and 70s, I wouldn't even admit it.
Well, I'm not talking about the markets. I don't remember anything.
So
anyway, go ahead, please.
So
I'm an open book.
I know. Well, that's why it's so much fun to be here. Anyway, this is a chart, but kind of a working chart for me. S&P, this is the SPY. Here's our big distributional top back here in late 21. And we created this downward trending channel. We're currently now this is the end of the quarter. I'll update that in a second. And so oversold at the end of the quarter. I find quarter end very important, but this area here, we hit this count when we got up to the August peak, which was also a touch of the 200. And so a number of resistance conditions that came in across this area. And so if we go here, let me get rid of this mess I made.
So do you consider like we're in breakdown territory and the recognition phase is about to occur where people are just embracing and we get some pretty good acceleration to the downside?
You know, that's kind of what I came prepared to talk about. And so you're way ahead of me as usual. And so here, this is through the 12th yesterday, and I'm going to show you an analog that might inform our view here. But so we've gone down, taken out this low, but I do want to point out
that test at 3,800 was really key, wasn't it? That bounce that we had.
Absolutely. And
that could be like a bull bear line for you, Bruce.
Oh,
Like
for
if
sure.
we ever got back above 38, the pictures changed.
Well, and no, see, I'm going to call this in a minute. I'm going to show you an analog. This is what I call ice here. And look at how we've rallied up to the ice. We had that 2-day big upward thrust, and then it just stopped and completely took it all back. So that's really
vicious.
Vicious, exactly. And so I'll update this a little bit with an analog, but I want to just point out to everyone the one thing I look very closely at are the quarter ends. And the quarter ends, you can see, because markets are dominated by institutions, and they're either buying up stuff at the end of the quarter because the market's super bullish, or they're selling stuff. And there's a few of them that are wickedly smart, but a lot of them that just follow along the other institutions. And so here you can see important low into the end of September 21, and then like right at the end of the year, the final top in the market. I mean, not an accident. And it's a throw over and an up thrust. By the way, this kind of could be an analog for what we just saw in the dollar, the UUP, where we talked about this upward acceleration, throw over at the top of the channel, automatic reaction, range bound condition. So this is kind of what I was referring to. And
Okay, where it could make another high and test the line up there.
Yeah, right.
That wasn't much of an overthrow there, though, in November.
No, it wasn't. But this was really quite an exceptional climactic run. Okay. So that would be the thing that I would point to. But you're absolutely right about that.
You know, that'd be a great dance, the throw over up thrust.
Yeah, well, I've been to some dances when I was concerned about the throw up. And so, but that was many years ago. That could have been this.
That punch.
No, that could have been the 60s.
Yeah, that was the punch at the party. Everclear, Everclear.
Yeah,
it's all right. Yeah, every time you come here, you talk about the markets. We take a little trip in a time machine, man. So
I just reveal myself. Yeah. Anyway, so I'll talk here a minute about green shoots if we have time, but yeah, I do want to show this decline down to here. Also notice quarter end, right? So mid-June low, test of the low, really good rally.
Yeah.
End of the quarter, important low, weaker decline, now back below it. And we'll talk about that a little bit more on this next chart. Let me go back like that. This is so I don't want to be completely bearish here. It's like I want to be able to focus on, the possibility of two different things. And so because we are at these important lows, here's the S&P 500, 72 years of data, 1950 to the present. And all I did was I just took midterm election years. So we're in a midterm election year. And a couple things. There's seasonality of the 4-year cycle that shows us having an important mid-year low in the second year of a presidential run. So, which is where we're at. But then there's another way to look at this, and that's just to take out the midterm election years and see what the seasonality is. And so here is the average seasonality of the just the midterm elections, which is every 4 years. So it's not 72 years of data, divide that by 4. And then you can see here that at the end of the quarter, you can see that we have a spring low across here. And so that it's a lower low. Currently, it's exactly what we have right now. And then the fourth quarter of the year is the best quarter for performance. And so I just wanted to give us two looks, not be completely bearish here, because there is potentially a case. I think the high CPI is the mess that we have to deal with, which could negate this. And I'm going to show you an alternative to this scenario. But here is an overlay of the S&P in 2022. And notice the family resemblance between 22 and the average of these midterms. So we had a Feb low, came in March. We have a March, April high, came in late March in the middle. We have a May low, We have a June low, And then we have an August high and an August, September high here. And then we go down to make new lows, which is exactly what we've done here. And so we're right now nesting on the end of the quarter lows, and that, and then the potential anyway for some kind of a rally coming out of here. And again, I'm not saying that this is my preferred outlook. I'm just saying it's a view, it's a possibility. And so we need to remain open to that. So let's now go to our analog.
Larry Williams has a view like that right now, doesn't he?
Yeah, as a matter of fact, I got to spend time with Larry this last weekend. And
you were with all the famous market celebrities.
I know they let me hang out.
You know why?
With them.
Because you are one.
No, they let me hang out with them, Dale.
Yeah.
Just
were
like you let me
Seattle?
Yes.
Yeah, it's
you let me.
Picture.
Yeah, you let me hang out with you. So see, it's like I'm a lucky guy.
Hey, I asked David Keller. I said, you have to invite me up there. He just ignored me. I wanted to meet everybody. Anyway, that was a great thing. It's still on tape too, where video where people could watch it.
I think it came out yesterday. So but Larry was a real joy. I've known him for I think the first time I heard him talk was 40 years ago. And I just really I love him. He's old school. He's fun. Anyway, so this analog is kind of unusual. This is daily data, SP 500. And this is 2018. We're going to look at the end of the year 2018 and note. Go ahead.
No, that's when they all sang Kumbaya. Paul and Bernanke and Yellen got together.
Yes,
Kramer made his rant at the bottom. No, that was a different rant. But yeah, that's when Powell reversed, right? The end of December.
Yes, exactly. Right. And so here, notice end of the third quarter. Look at this beautiful upward stride, gets tighter and tighter, diminishing thrusts. And then finally it has a thrust that fails at the end of the quarter. So you've got these institutions just pushing up their favorite stocks, change of character in the fourth quarter, right as it begins, and down it goes. And so then we have a redistribution, and this area here. So let me just show you this. This area is a classic redistribution. Now, again, this is daily and is followed by this waterfall decline into the end of December. Now, here's a point and figure chart of the yellow shaded area, and it goes down to this 2450, 23 and a quarter, rather wide count because it's a wide structure. But look at, we went right down within one box of the low count of the range, and that was the V bottom low. And so the thing that is of most interest here to me is this: if in fact we had a new low here, and then we had an attempt to rally here, kind of a wedge actually, and that we call this the ice, because what it does is it comes up and it gets underneath the old support, tries to get back into it, and has a rally of poor quality, big tail right here, and then down it goes. And so this is just my kind of warning about the market here, and that the Fed is currently in a mode where they're basically going till they break something, and the very strong dollar is a great way to break things in the rest of the world. And so the dollar strength, it creates tremendous stress, especially in smaller developing countries, because a lot of times they price their debt in other currencies, which is the reserve currency, which is the dollar.
Why does the Fed want to accomplish that? I know they're accomplishing that, but why do they want to break other economies that have dollar denominated debt? You know, who's going to bail them out?
I think that their whole view is that they want to destroy demand in the marketplace to bring prices down. And so they understand that there's consequences because the Fed's fighting always, their mandate is low unemployment and low inflation. And those two mandates are in opposition to each other. And so
financial stability.
And financial stability. And when they tighten like they are now, they're trying to wring excess demand out of the system. And also inevitably they're
you had it right the first time. They're trying to wreck economies with the dollar.
They're going till they break something. And that's exactly what they did in here.
Break before we go, Bruce. And it's not going to be, you know, some kind of toy from Walmart or
Target. Well, they're
what are they going to
remember that they did the Credit Suisse. There was rumors. Right. There'll start to be rumors, and it's going to be these, you know, kind of where's Waldo moments where we're looking for where, you know, Waldo, because Waldo's going to be broken. And so this is like the Credit Suisse was a rumor, not saying I don't know anything. But all I want to do is I want to take the current market and I want to do a bit of an analog as our conclusion to the session, because I know we got to end. But here I just lined up this is
Thanks
weekly.
For getting me back on track.
Well, because I know you're pretty ruthless about yanking me off stage. See, so
I got the hook ready, man.
I've been schooling on you. Anyway, so here's a redistribution, and now here this is all one redistribution, and on this weekly chart we have two of them. And I actually think that what we have, and here's the point figure chart of these two redistributions, they both count roughly into the same area with a 3350 extreme low. And we're just now starting to break down. And here's the 3800 area that Dale was talking about right there. So you can see it trying to hold that area. And if it can't get back above it stat, then you know that we have the potential for this business. And so just these two arrows show what I think the analog lows are. This is downsloping. This is not up here in 2019. Downsloping means I think this is a weaker structure, and we're right now down here, and we have this area, which now we're in October, and I think that this could very well be ice. And just as this was ice here. And so we need to be really
slipped all the way to till year end.
Yes.
Slip and slide till the end of 2022.
And the only other thing I would say in conclusion just is that what we need, if this is in fact a spring, which is what our seasonality chart would suggest, then we need to get back above using your idea of the 3800 level.
It's not just mine. It's everyone's 30.
Everyone's. It's got to get above that in a hurry. And springs usually when they resolve, they do it quite suddenly, dramatically. And so this thing would have to take this bad news of the CPI and then be able to have a bad news bottom and rally and climb the wall of worry. And that would be the thing that we would need to see to suggest the scenario might not be the right one.
What a great interview, Bruce. What a nice presentation, and really so many nuggets on range bound with the climax in UUP and quarter end look, and then the midterm seasonality really brought a lot of insights to us today. So
and then the only other thing I'll tell you about is that we do a free Wyckoff market discussion. Well, we're doing a free one next Wednesday.
Okay.
And so people are welcome to join. We don't share your information. Go to Wyckoff Analytics and come join us. It's a blast. We have a lot of fun.
Yeah, so if you think you learned something here in 30 minutes with me interrupting Bruce every minute or so, just imagine that I wasn't here interrupting, how much more you would have gotten out of it. So
The interruptions are the fun part.
we have to have fun. And Bruce, thank you so much for, bringing some clarity and some things for us all to consider going into year end. Look forward to talking to you during the winter sometime.
Thank you, Dale. And
All right.
thanks everyone for having me.
Bruce Fraser, and join him next Wednesday. Learn about what he knows, and he's a patient guy, and you're going to learn from
Hey,
him.
thanks for joining us, Bruce. Just want to say thanks.
Thank you, Blake. It was a blast. It's always good to be here.
Hey, Dale,
Okay,
just
buddy.
just heads up, your microphone's kind of light, so I don't know if it's up on your head or something.
It's my mouth.
Oh, okay. All right.
All right. Anyway, thank you so much, Bruce. I'll
Thank
catch
you
you
all.
I'll catch you on Twitter, buddy.
Okay. Take care, everyone.
All right, Bruce. And everyone could join the team on the Morning Edge 15 minutes from now exactly. So now I'm going to find out what the markets are doing. Sometimes it's not easy just conducting an interview when you have a lot of positions on. Anyway, you're welcome, guys. See ya. 10 years at 4. All right. Thank you. Adios.